Welcome to episode 3 of Tomiczek Financial's podcast series. We're happy to be here with you. And when we have anything, and I'm pretty excited about today's topic. And when we're excited about topics, we look to Pierre for advice. And we're happy to have you in studio today. And today we're going to be talking about how to really manage your credit score. And what's that about? I could remember the first week I got to Canada, people were saying, start building your credit score. I had no idea what that was. I had a sense, but what basically is your credit score, and how do how can you start building your credit score?
Well, firstly, thank you for bringing me here. I don't know if I'm going to bring any excitement to this topic about credit. But one of the things we're finding in North America and pretty much all over the Western world is that in order to meet your goals, you need to have a good credit score. Think about it. You need credit to rent a car, to get a hotel, things of that nature, and even to get a rental apartment, you need to have a good credit score. And so, really, with your credit score, what it says is what type of individual you are with managing money. A good credit score could open a great deal of possibilities. A bad credit score could close those doors towards your goals.
So we talk about this and all of these possibilities that exist in terms of we needing a good credit score. So how do we start? I'm new to Canada. I've just arrived out of the airport. I'm starting college in a few weeks. How do I start building my credit score?
Actually, very good question. It's almost as a new Canadian, it's almost like a catch-22, right? How do I build credit when I don't have any credit, right? So, and the door will be open once I have credit. So, how do we start? So, one of the things the way you could start is maybe with a credit card. Now, you don't have any history if you've just arrived from overseas, so there's no track record to determine whether or not you're going to make your payments on time.
Right.
So a way around just going to a regular bank to do a credit application would be to get a secured credit card. So basically what it is that you give a credit card issuer X amount of dollars, so let's say $500, and then they'll provide you with a credit limit of $500. And basically what that does, as long as you keep making your payments on time, it starts to build your credit history. And then over time, you could get your money back and just have purely an unsecured credit. So that would probably be the first step in terms of building credit. And then eventually, various things that you're going to undertake during your financial life will also start to build your credit history. Things such as going to and renting a place, right? Eventually, this will form part of the credit reporting agencies. Also, getting a loan at a bank or at a financial institution will also give you the ability to start building credit. So anything credit related, loan related, unsecured or secured, will start to help you build your credit history.
So acquiring these things, your credit card, acquiring a loan, that's one thing. But something else you mentioned there is the payments. So that helps in building. So how should I go about managing payments?
Yeah, very good question. So one of the things I would say, one of the most important aspects, which accounts for about 35% of your credit score, is making at least the minimum payment by the due date or before the due date. By doing that, will boost your credit score and provide you with endless possibilities. So making the minimum payment on time is probably one of the best things that you could do.
So in making these payments, and you said boost your credit score. So how quickly can that happen? How quickly can that improve your credit score?
Typically, it's about a 30 to 45 day kind of turnaround, and the reason is it takes that much time for the lenders to report back to the credit rating agencies such as Equifax or TransUnion.
So we want our credit score to be boosted very quickly. Maybe we're applying for a new loan or something, we need it, or we're renting a new place and we need a good credit score. How many credit products should we manage? How many credit cards should we acquire? Should we take on a loan? What should we be doing?
You know what? You know how with investing, you want to diversify?
Yeah.
You probably also want to diversify with your credit product. Now, I'm not advocating going out there and getting every credit card under the sun and getting every loan under the sun. If I look at myself, I've got like two credit cards. What I do is I have one credit card with a low limit that I'll use on online purchases. So roughly about $1,000 or so. So that way, if something happens, I know that I'm protected up to $1,000, so they're not going to go on a wild spending spree. And then I have another credit card for larger purchases, when I'm going to go, overseas, going to Florida to watch my beloved Blue Jays during spring training. So I would say about 2 credit cards and maybe one personal loan or a line of credit. Having too much credit could also also impact negatively your credit score. So you want to have that fine balance whereby I don't want you to fully utilize all the credit available. I just want you to manage it in an appropriate way, which will provide you access to meet your goals and also ensures that your credit score is increased.
And also, I think it's important in terms of managing your credit. You mentioned investing. Ensure that you are not, putting money towards one particular portfolio and neglecting the other. So you don't want to give up investing just to build your credit score as well. So you must have that balance between the two.
Exactly. I mean, I couldn't have said it better myself. That is so key, because you want to use credit wisely, right? So we know that the lenders, the big 5 banks, that's a big chunk of their revenues is from people using credit. I don't know if you know this, but 50% of Canadians pay their credit card debts in full. So therefore, credit rate, the interest rate that they pay, they don't really worry about that. But the other 50 that pay the minimum, that's what keeps the bank rolling. And with interest rates are 24 to 25%, I would have to generate about a 35 or 40% rate of return on an investment for it to be worth your while to invest. So managing your credit will make a whole lot more sense.
And you said 24 to 25% for credit cards. That's because it's unsecured.
That is correct.
So having a secured credit product is probably going to lower that interest rate for you.
That is correct. It's kind of a balance also, because there are some credit card issuers that will provide you with a low interest credit card, whereby the interest is probably half of the normal 20 to 25% the interest rate, but it comes with a fee. I would try to avoid paying fees on credit cards. Yes, there are some credit cards that provide points, such as the Avion for travel with RBC, which has an annual fee of in excess of $100. But there's so many credit cards with so many benefits and so many options that are free of an annual fee that will do exactly what we want the credit to do, boost our credit score.
Be able to use your credit products to your advantage. That's very, very important. So, I'm boosting my credit. I'm looking at my credit products. How often should I be checking my credit score?
Oh my God! I'll give you a little story. First, let me answer your question.
Yeah.
Monthly at the very least. Give you a little history. Originally, I'm from Montreal. Been in Ontario for since the 90s. So it's over 30 years now. But when I first came to Ontario, probably within the first 3 years, my credit was hijacked. Someone took out a credit card in this little remote town in Quebec that I've never even heard of, right? And they almost went to town on this new credit card. If it wasn't for one teller in this little credit union that basically said, Mr. Tomiczek, why are you opening an account here and why are you taking a credit card here when you live all the way in would be Ontario?
Right.
And the guy had no answer to that. And as a result of that, she denied the application, called the credit card bureau, and they in turn contacted me. But had she not done that,
you would have not known.
Exactly. Yeah. So now what I do have is with TransUnion and Equifax is that whenever someone takes credit, they have to contact me. Even if it's myself, even if it's myself, I get a report that automatically says that so and so is applying for credit under your name. Is that legit? Right. So you want to check it frequently.
So I'm checking my credit score frequently. I'm building my credit score. Why is it so important to have a good credit score? What opportunities did that open me up to? And I know you mentioned it on the surface of some of the opportunities, but just being very specific, what opportunities of having a good credit score? And I think that's what we want to stress on, the importance of having a good credit score.
Probably the American dream, let's turn it into the Canadian dream of having a home, right? Without having a good credit score, roughly about 660 or more, your chance of getting a mortgage and getting that dream house for you and your family would be severely dashed. You need to have good credit, or else you're not going to be able to go to what has been deemed as A lenders. You're going to have to go to various alternative lenders, which will charge probably an arm and a leg and fees, which will again make your your home purchase goal or dream
so much harder.
So much harder, definitely.
So we've talking about the importance of building your credit. We've talked about having a good credit score. But I guess there are other things that we can do that damages our credit score as well. And how does that affect us?
Yeah, so here are some I'll use your word, damaging things that you could do to severely impair your credit score. One, having too much credit, right? Being a credit seeker, so going from applying from card to card, that will have some negative implications towards your credit score. Another one is your credit utilization rate. So what does that mean? Fancy word. Basically, think of it, if you are always up to your credit limit, right? So let's say your credit limit is 1,000 and you're at 1,000 and sometimes you go over, it kind of tells the lenders that you're maybe not managing your credit that efficiently. One of the rules of thumb that they say is that you should be at about a 30% or 70% utilization rate. So what does that mean? With $1,000 credit limit, the maximum that you should be spending is about $700. Once you hit that $700 on the $1,000 credit limit, you want to start paying it down. You want your utilization rate to be at about 30%. Now, having said that, a way to minimize that utilization would be to potentially increase your credit limit. So if you find that you're going to be at the $1,000 threshold, you may want to seek, a $1,500 or maybe a $2,000 credit limit increase. Now, again, it's one of those catch-22.
Right.
I don't want you to get more credit if you're going to use it more and get right back up to the 2,000 limit. So it would defeat the purpose of doing that. And also, one of the things that people are not aware of, one of the impacts to your credit score, so I've kind of said 35% is you making your minimum payments on time, and then secondly would be the utilization rate, which has a big impact. But kind of the third thing is the length of time that you've been with a creditor. That has a 15% impact on your credit score. Basically what that means, the longer you've been with a lender or a credit card issuer, the better that it is. It will help boost your score. So what people think is, okay, I've got too many credit cards, and I've got this credit card that I've had since I was a little kid.
Right.
I've had it for like 20 years, and I've just got this new credit card which has all the bells and whistle. I'm going to cancel this credit card. But now you've canceled 20, 25 years of history.
Right.
And as a result of that, your credit score will go down. So you may not want to cancel the credit cards that you've owned for a longer period of time. Maybe you want to lower the limit, if you're worried about that. But you want to keep the ones that you've had for a longer period of time.
And because if you have history on your side, it's easier to maybe acquire a new loan product from that lending institution.
That is correct.
When that time comes. So I think those are pretty important points that you make. And one of the things that I have noticed that nothing goes missing on your credit report. So keeping your payments up to date, ensure you don't go over the limit. Seeking credit, I think that shows up on your credit report.
That is correct.
So these are the things that you want to use in order, or avoid, I should say, in order to ensure that your credit report is a clean one when that time comes for that big purchase of a mortgage or a big loan that you would need.
No, absolutely. Keeping on top of things, definitely checking on a regular basis, making your payments on time, or I would say not by the due date, before the due date. Because sometimes when you pay by the due date, there's kind of a time lag when you're making payments online. There's like a 3 or 5 days to kind of turn around, so that could actually make you late. And then lastly, I'll kind of give a little tip that I do is when I make most of my purchases with my credit card. One, because of the points that I get. But one of the things that I do to make sure that I don't have to worry about when is the due date is that when I make the payment, when I make the purchase with my credit card, at the end of the day, I go on my online banking and then I'll transfer the money into my Visa right away. So that way I know that I've made the payment. Because here's the reality. It's either Visa or debit nowadays. So if I was going to pay it via debit, it would have gone on my account right away.
Right.
So if I'm going to pay with Visa, then just
transfer it.
Just transfer it, and then that way you'll never have to worry about that. And then you'll have that old adage that my mom has always told me: if you don't have the money, that means you can't afford it.
That's right.
So don't pay it. So that keeps me in line.
All right, so I think that has brought us to the end today. Thank you again, Pierre, for coming on and sharing with us. And I think we're going to start improving on our credit score. We're going to be checking our credit score monthly now. Because of that story you told me, I think I have to go home now and check my credit score. But I could do it on my phone when I get some time. But thank you so much for coming on today.
Thank you for having me.
All right, that has brought us to the end of episode 3. And today we've talked about credit score. And I hope today that you are better equipped to manage your credit score. We here at Tomiczek Financials want to help you. And if you are looking for financial advice, you can like our page. And of course, leave a comment. If you have any questions, we'll get back to you. So thank you for watching today. And that has brought us to the end of our podcast series for today.